What's up, everybody? This is Investing Sensei bringing you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 every week. So these videos are definitely fun to record, definitely because we pull up the calculator, crunch some numbers, but we do go over the list that you guys have provided or that you guys have wanted me to cover some of these companies. So if there's actually one that I haven't covered in the past and you don't see it on the list, let me know. I'll be happy to add it to the list and we will eventually get to it. But in this episode, guys, we will be going over ARES. Hopefully I did pronounce that correctly. If not, I apologize in advance. But after that, we will be continuing to go over the list. So let's go ahead and get started here, guys. So I am pulling up Seeking Alpha. So it's ARES, ARES Management Corporation, currently trading about $77.97. If we actually pull up a little bit about the company profile, we can read something about them. So ARES Management Corporation operates as an alternative asset manager in the United States, Europe, and Asia. The company's tradable credit group segment manages various types of investment funds, such as commingled and separately managed accounts for institutional investors and publicly traded vehicles and sub-advised funds for retail investors in the tradable and non-investment grade corporate credit markets. Its direct lending group segment provides financing solutions to small to medium-sized companies. If we look, they are in the sector of financials. Industry is asset management and custody banks. You'll see that the employees are showing up that they do have about 2,238 employees, and they were founded in 1997, quite a bit ago. And then their website is actually aresmgmt.com. So you guys can visit them, look at the products they do provide. But that is a little bit about the company profile. Let's go ahead and pull up right here the chart so that we can kind of see. So if we look at the year to date for this, they are up actually 14.07% in the green. If we look at the 1 year, they're actually still up in the green by 2.78%, especially with the market in general being down. If we look at the 5 years, they're up 236.08%. Very, very awesome return here so far. If we look at the 10-year return here, it looks like they're actually not even showing that because it probably doesn't even go that far here, apparently. If we look at the total return, they do show up as 343.26% return. Pretty cool there. Definitely a lot better than some of the companies I have covered in the past where you just got a very, very bad capital appreciation return there. If we look at the 52-week range, they are actually, the 52-week low was $53.15. And then 52-week high is $86.06. They're actually trading closer to the 52-week high. If we look at the EPS, is 3.20, PE 24.37, dividend rate is $2.44 here. Yield is a 3.13%, and then market cap is actually 22.97 billion market cap for ARES Management Corporation. Let me go ahead and pull up the dividend scorecard for you guys. Again, this is in the financial sector. If we look at the dividend summary, you'll see that dividend yield is 3.13%. Pretty good dividend yield, especially for a company if you plan to hold it for the long term. I am not invested in this company, so let me know in the comment section if you are and why you plan to hold it or why you're holding it. And then annual payout is $2.44. So for every one share that you own of this company, it is you would get $2.44 for the annual payout. And then payout ratio is actually 76.92%. 5-year CAGR is actually very, very awesome here, 16.64%. So a double-digit 5-year CAGR. Those are the type of companies I love to see. Dividend growth is 3 years. I'm not sure if this is correct or not. Let me know in the comment section. Seeking Alpha has been known to have this value incorrectly. But the dividend frequency, they do pay out quarterly, which is about 61 cents every single quarter. Let's go ahead and crunch the numbers, guys, and see how much would you have to have invested of this company if you wanted to make $1,000 a month. So in order to make $1,000 a month, let's go see how you would actually find that. So we want to make $1,000 a month. There's 12 months in a year, so annually you have to make roughly about $12,000. You can actually take this $12,000 divided by the annual payout. So we would divide the $12,000 by $2.44. This would give you the total number of shares you would need to kind of own to achieve about $1,000 a month. So about 4,918 shares is what you'd have to own. If you want to find out the total amount invested, currently, you would multiply that total number of shares times the current share price, which is $77.97, which roughly gives you about $383,000 that you'd have to have invested in this company, and you'd be roughly making about $1,000 every single month. Pretty sweet, guys. Again, there's actually other ways where you wouldn't have to actually deploy all this capital. You could deploy it over time, and it would require a lot less capital because you would actually be reinvesting the dividends, and that snowball would grow in the long term, of course, if it is a great company. So that's something that you would have to research in that. But again, quick way to calculate this is you could take the 12,000, you could actually divide that by the dividend yield, which is 0.0313. You'll see we roughly get about $383,000. And yeah, let's go ahead and do the next one, which is how much would you have to own of this company to make $100 every single month. This one seems to be a little bit more achievable. You could actually take the previous answer and divide it by 10, but just because we do have the calculator, let's go ahead and crunch those numbers. So $100 is what we want to make every single month, 12 months in a year. Total annually, we need to make $1,200. Divide that by the annual payout, which is $2.44. So we need to roughly own about 491 shares, and then we can multiply that times the share price, which gives us roughly about $38,000 that we'd have to invest in this company, and we'd be roughly making about $100 every single month. Again, quick way to calculate this is you could take the 1,200 divided by the dividend yield, which is about $38,000. So that's pretty cool there. Let's go ahead and do the last one, guys, which is $100 every single week. This would be pretty awesome. So every single week you'd be basically getting $100. So we want to make $100 every single week. There's 52 weeks in a year, so about annually we need to make roughly about $5,200. You can divide that by the annual payout, which is $2.44, to get the total number of shares that you'd have to have invested in this company, which is about 2,131 shares. Multiply that times the current share price, and this would give you roughly how much you'd have to invest at the current moment, which is about $166,000. Again, quick way to calculate this is take the 5,200 divided by the dividend yield, and you'll see we roughly get about also $166,000 invested in this company. You'd be roughly making about $100 every single week, which is pretty awesome, especially if you have a high conviction in this company. I am not invested in this one, so let me know if you are in the comment section. While you're down there, consider subscribing with that bell notification. We're trying to get to 20,000 subscribers, so definitely help me out. As well, drop a big thumbs up on the video to help out the channel. Let's go ahead and wrap up this video by going over the dividend yield. So this actually right here is the dividend yield. This actually fluctuates over time. This kind of tells us when the best opportunity is or was for entering this stock. So you'll see that around 2018, they had a pretty juicy dividend yield, which was right around 6 to 7%. And it's been fluctuating, and these 2019 it actually went down to the 3%, 4%, and then slowly it's been fluctuating around 3%, 2%, and that's potentially because they could have raised, we've gotten a lot of capital appreciation potentially on this company, which decreases the dividend yield, well, I guess the starting dividend yield in general. But yeah, this is actually all I have for you guys in this video. Let me know if there's any other companies you want me to add to the list. Again, don't forget to subscribe with that notification, as well drop a big thumbs up on the video. Definitely would appreciate it. I will talk to you guys later. Take care, stay safe out there. Bye, guys.